Good afternoon, Bill. We missed out last week.
Well, welcome back, Did you enjoy Margate?
Margate, that's lovely, exactly. I didn't go that far, I wasn't on the coast. FOMC last night, a bit of mutiny in the Fed.
Yes, I think it's positive, and one of the things, as we were talking about earlier, it is something that Placer was not pro QE3. So I think basically what we're starting to see is, again, not so much a mutiny, but the feeling that some people were expecting that same type of dissent from the Bank of England. We may get it next week when we get the Bank of England with the.
So is that now a sign that one person has, from the Fed has said, we need to start tightening things up?
Well, I think one of the things where I look at is being positive. Okay, in the last year or two, or maybe even during the Bernanke, it was Bernanke and the 7 or 8 dwarfs. It was the Bernanke Fed. Then it was the Greenspan Fed. Now we see it, which I think is quite healthy. We're seeing a Federal Reserve, not the Janet Yellen Fed. It's not like the gospel according to Janet.
Do you think that's got anything to do with the fact that she doesn't have much presence as a person? Is that something I can say? Or?
Do we have American viewers here?
But do you know what I mean?
I think it's a situation where, right or wrong, and I would look at it as being wrong, I don't think she's made her stamp on the Federal Reserve yet. Now, this may totally change on the 21st and 22nd of August when we have the traditional Jackson Hole. Now, that may do something, or it may be stamped tomorrow. I'm not expecting. What happens if we get plus 400,000 non-farm payrolls and the rate trade drops to 5.8 or 5.9? Now, that may change it. Now, they did not, the Federal Reserve, when they announced last night, did not have access to the non-farm payrolls, but they would have had the GDP numbers in both days of this session.
So, I think just so everyone's completely clear, when the economies are all recovering very nicely now, rates are low, money is cheap and easy.
Yes.
What is the point in tightening it up?
There isn't, but let me just tell you, and I'm talking from a consumer standpoint. Your lovely girlfriend, if she can buy those Jimmy Choo shoes 6 months from now, a year from now, at the same level she could have bought last year, is she going to go and buy them? No. When people are not concerned about inflation, when people are not concerned about the cost of things,
does that really apply to you and I? I certainly, I mean, maybe subconsciously, but I don't go out there and think, oh gosh, I can't wait until I buy.
Well, you've just verified that you're not a woman.
I'm not going to wait, because in a year's time I...
Yes. Now, I just had coffee with a friend of mine, who's beginning to start panicking, Now, he's just bought a flat which a year ago would have been much too expensive for it, but he has to get a mortgage, Now, he's a member of my president saying, hey, I think the Bank of England can start raising rates as early as November. Well, so he's starting to sort of, as I say, buy things. Now, he could have bought the same flat for, I don't know how much less last year. Now he's paying full price because the fact is there's demand for it. As we saw yesterday with mortgage approvals here in the UK. Now, it didn't go up much, but it did show that mortgage approvals, after 4 consecutive slight drops, they're starting to pick up right now.
But the housing market is stalled altogether in July, isn't that come out today? There's very little growth.
1/10 of 1%. Yeah. But I mean, let's be perfectly honest, If house prices are 20% below, let's say, where they were in 2008, Now, 1% plus 1/10 of 1% doesn't mean anything. But I mean, if we've seen up and up and up and up and up, again, it was only 1/10 of 1%. But again, the average house price was, and I know we have to use the word average, was the highest on record, and it's more important for your age and my grandchildren's age. They're trying to get on the property ladder. And knowing that we have 3 extra bedrooms in a house, I want them to get on that property ladder sooner rather than later, if you catch my drift.
No, I do. Let's move on to the geopolitical tensions we've got going on. Which of the Ukraine issue and what's going on in Gaza is more important for markets?
Well, again, I'm not trying to differentiate, and I'm not trying to, I hope we don't upset some of the viewers, but I mean, Gaza and Palestine and Israel have been going on since 1948. It may be a little warmer now than it was, but I mean, you don't remember the Six-Day War in '67, okay? Because if you did, you'd probably have an Egyptian tank. And if you had an Egyptian tank, it only had one gear, that was reverse. So, I mean, that's when it was a serious problem. And again, I'm not trying to say it's not a serious problem, but
as far as markets are concerned,
yeah,
is everyone turning a bit of a blind eye if you're an investor? I mean, I think
so.
A problem that's always happened.
Yes, and again, it's something like, oh, well, here they go again type thing. Now, I would expect it's probably getting a little warmer, and I'm not talking about the weather, than it was before. But again, is it justifying the total inactivity? I mean, you know, I think one of the places that was bombed out was a United Nations school or something. Well, I mean, all I've heard is Ban Ki-moon saying, well, you know, boys, you should sit down and talk about it. But he's done the same thing about MH17. Well, I think you should talk about it. I mean, I think, unfortunately, it's probably, again, justifying the total inactivity of global, you know, regulatory authorities. But I think what I'm looking at is I think the geopolitical situation, Ukraine, Russia, EU sanctions,
that's what's moving markets. So. That's, I mean, despite very strong data and earnings has been very, very good. Markets are coming off a bit there, starting to feel the heat a bit.
Yes. Now, you know,
and that's all down to the Russian sanctions issue.
Yeah, I'm saying yes. In answer to your question of the two you presented is having a major impact. Now, or are we starting to see, I mean, if you start listening to the talking heads, you know, there are people out there saying that they see the same similarities in 2014 versus the dot-com boom of 1999. I think it's a situation where we may be seeing rotation. But what did we see? Was it Twitter yesterday or something? The stock was up 25% or something. So I don't know. I mean, or is it just a situation where now we're into the summer lulls? Gee, you know, in the last 3 or 4 days, we've seen the S&P and the Dow, you know, again, all-time highs. You know, the NASDAQ only went 10% below its all-time high. You know, now are we seeing that? And I think probably what we're seeing is the negative sell-off in Europe having an adverse effect on the sell-off in the States. I mean, the last I looked, I mean, you know, the DAX was still off almost 1% today, but yet the FTSE wasn't, okay? We're seeing Europe now off far more than we're seeing with the FTSE.
Yeah. I mean, it's not as if there's been that much of a sell-off on the Dow, for example, but I mean, it all seems pretty resilient.
It does, and I mean, again, let's go back.
I mean, 2 years ago, there would have been a huge sell-off.
Yes.
And we sort of all learnt our lesson? You know?
Well, or are we getting immune to it? It's sort of like, well, it's July, okay? All right, let's go back to another question I was asked this morning. What about Argentina? What about Argentina? You know, I mean, this is their second default in 12 years. Now, you go to Slovakia or Slovenia or this, that, and the other, you're going to say about Argentina. Huh? What's an Argentina? Is that a cocktail? Okay, so I mean, we have the 26th largest economy in the world bankrupt, and people are saying, well, maybe Lionel Messi should give him 2 weeks' salary and bail him out.
That'd probably be enough, wouldn't it?
I think it would be. But going back to what you're seeing, if we were that concerned, even about the Ukraine and Russia, and the whole thing was, Germany didn't want anything because Russia would cut off oil. You know, will China support Russia because of the huge deal they've done? All right, I mean, I just looked, okay? West Texas Intermediate struggling at $100 a barrel, okay? Brent is what, 106. So, I mean, you know, this was, you know, when the Ukraine first started to be, you know, a problem with, this was when Crimea, I can remember Crimea, that was 3 months ago. We were at 115 on Brent. Now it's a situation, you know, it's a sell-off. But now, is this sell-off now dollar-related rather than people getting, you know, immune to what's happening, okay? Because you are starting to see, you know, for the last, 40 years, we've seen euro at 135 to 137. I mean, you know, it was going nowhere. Now we're struggling at, you know, below 134. And even sterling is, you know, a massive sell-off in the last, 4 or 5 trading days.
Right, well, let's finish off with where you put your money now. Put you on the spot.
My NatWest account.
Yeah, you see it on the sidelines.
Yes.
There's no real bargains out there. There's nothing that really strikes out.
Bargains maybe is the wrong
Buy the
word.
dollar.
Yes, I have been long. Any of our clients know that I have been long and wrong the dollar. Okay, I got into shorting the euro probably sooner than I should have. You know, I've taken some bumps, and I did. Don't anybody listen to this? You know, I broke rule 1, 2, 3, and 4. I doubled up to catch up. Okay, now I did go long sterling because again, first part of July. You know, when we were looking at the 100 and 200 day moving average, sterling looked like a buy, okay? And it traded up, and I made, you know, a decent amount of money there. Now I have been short sterling, albeit I think we may reach a point with dollar sterling, whether it's 160, I don't know, you know, you've got the moving averages and the Fibonacci. But there is a feeling that if you're going to look at interest rates, the Bank of England, I think, will raise rates in November of this year, even after last night's decision by the Federal Reserve, although it's not reflected in the Treasury market. I think the Federal Reserve could start raising rates as early as next year. So I think we can start seeing the sterling, looking at the GTF, the dollar will be number 1, but sterling will be a very strong number 2. So maybe you do euro sterling rather than dollar sterling, but I think that's a move right there. But it's also a situation where, excuse me, you know, I got caught up in the IPO boom like everybody else did, okay? You know, I'm out of my Royal Mail and most everything else, and 2 or 3 other things that I'm sort of in. But as you said, I mean, there's nothing out there that looks so attractive that I'm willing to put my foot in the water right now. And as I say, now with tomorrow being the 1st of August, and everybody in the world, you know, going on holiday for the next month, you know, it's going to be a very difficult time. And I mean, even yesterday, what you were seeing, whether it was the European equity markets, they were still like 30 to 32% below the 100-day moving average. I mean, it's just a volume, you know, we don't have to tell each other that. I mean, it's just, you know, one trade. So, I mean, if somebody wants to come in and buy gold or something, you could see a disproportionate move, but I don't see any fundamental changes in the market, you know, during the month of August.
Okay, well, I mean, maybe honesty is not the best policy as far as sales pitches goes. I mean, we're not selling the markets, are we?
No.
But I mean, if we're being honest.
Yeah, I'm being honest. As I say, I am probably, you know, I did some IPOs and the other things, but I am probably away from a couple of foreign exchange trades, okay? I am probably in the biggest cash position, you know, and I'm not talking millions, I'm talking, you know, fiver, you know, this year, okay? I'd rather sit on the sidelines, I'd rather miss a few trades, you know, when I see a directional move on something I understand. I don't understand IT and this, that, or the other, but the areas that I'm involved in, I don't see anything right now that is just, you know, giving me the old Muhammad Ali shuffle to say, oh man, I got to be in that trade, okay?
Perfect. Great advice.